On February 13, 2025, President Trump signed a plan to change how America trades with other countries. This plan introduces reciprocal tariffs. The U.S. will now charge the same taxes on imports as other countries charge on American goods. This move has generated a lot of debate. Trump argues these tariffs ensure fairness in trade. He believes other countries impose higher taxes on American products. The goal is to protect American businesses and create a balanced trade system. Critics worry these tariffs could lead to higher prices and hurt the economy. The coming months will reveal the full impact of these tariffs. How other countries respond will determine if this leads to balanced trade or a global trade war. The concept of reciprocity in trade is about ensuring fairness and balance. President Trump argues that for too long, other countries have placed higher tariffs on American goods, putting United States businesses at a disadvantage. He believes that this has led to a decline in American manufacturing and job losses. To address this perceived imbalance, the reciprocal tariffs aim to create a situation where the United States charges the same tariff rates on imports as those charged by its trading partners on American exports. The administration hopes that this will pressure other countries to lower their tariffs, leading to freer and fairer trade. However, critics argue that this approach oversimplifies the complexities of international trade. They point out that tariffs are just one part of a complex web of trade policies, and focusing solely on tariffs ignores other factors that influence trade flows. Furthermore, they argue that this tit-for-tat approach could backfire, leading to retaliatory tariffs from trading partners and ultimately harming both sides. The risk is a trade war where everyone loses out. While the stated aim of these tariffs is to protect American businesses and jobs, one of the most immediate and direct impacts is likely to be felt by American consumers. When tariffs are placed on imported goods, the cost of those goods increases. This means that everyday Americans could see prices rise on a wide range of products, from cars and electronics to clothing and food. The administration argues that these price increases will be minimal, and that the long-term benefits of protecting American jobs outweigh the short-term costs. However, economists warn that these price increases could be significant, especially for essential goods like food and medicine. For families already struggling to make ends meet, even small price increases can have a significant impact on their budgets. This could lead to a decrease in consumer spending, which could ultimately harm the economy. The real question is whether the potential benefits of these tariffs in terms of protecting American jobs will outweigh the potential costs to American consumers. Section 4. Uncertainty looms a waiting game for businesses. The announcement of these reciprocal tariffs has injected a significant degree of uncertainty into the American economy. Businesses thrive on predictability, and the lack of clarity surrounding the specific details of these tariffs makes it difficult for businesses to plan for the future. The administration has stated that it will be studying the tariff rates of other countries over the coming weeks and will announce specific rates at a later date. This waiting period is creating anxiety for businesses that rely on imports, as they are unsure how much their costs will increase or if they will need to find alternative suppliers. This uncertainty could lead to businesses delaying investments, hiring, and expansion plans. This could slow down economic growth and potentially offset any benefits from the tariffs. Additionally, the uncertainty could lead to volatility in the stock market, as investors react to news and speculation about the tariffs. The lack of clear information and the prospect of a protracted trade dispute are creating a climate of unease in the business community. Section 5. Political peril, a gamble on growth. The decision to impose tariffs carries political risks for the Trump administration. These tariffs will be judged by their impact on inflation and economic growth. If tariffs cause inflation, it could erode consumer confidence and slow growth. This could hurt Trump's standing with voters, especially those struggling economically. Retaliatory tariffs could escalate into a trade war, harming the global economy. The administration hopes tariffs will lead to fairer trade deals. It's a gamble with significant consequences for the economy and Trump's future. The coming months will reveal if this gamble pays off or backfires.